That's compounding, the true secret of trading. When most people come to trading, they start with a small trading account. They then want to make enormous returns very quickly. I know I did. You will often see people promising or claiming returns of 50% per month or even 100% per month. Quite simply, they are lying. You can make those sorts of returns, but only ever in the short term. The longer term result is always the same: huge losses and blowing your account. You can prove this to both them and yourself with some simple math. Someone starting with a £2,000 account making 50% per month would have over £4 billion in their account within 3 years. Ridiculous, right? However, by taking a more cautious approach and allowing compounding to work for you, trading can still build you great returns over the long term. Compounding is a little like a snowball being rolled down a hill. It starts off small but gathers more snow as it rolls. The bigger it gets, the more snow it accumulates on each rotation. Compounding is how a trader builds their account into something they can use to create an income source. Let's say you spend time learning to trade and become consistent. You then either build or fund your account with £10,000. You aim to compound the account averaging 5% per month, which is a professional level of return. Compounding results from using previous growth to help future growth. So at the end of month 1, you would have £10,500 in your account, which is a 5% increase from £10,000. You would then look to make 5% on the new total in month 2. At the end of month 2, you would have £11,025. You would then look to make 5% on that amount for month 3, etc. You are able to do this using your money management rules of only risking a small portion of your account on any one trade. As your account grows, so does the monetary value of your risk. In month 1, you are risking £200 per trade, which is 2% of £10,000. In month 2, you are risking £210 per trade, which is 2% of £10,500. Your risk of 2% per trade stays the same, but the money risked grows as your account grows. This is compounding in action and is how a professional trader builds and protects their account. Look at our £10,000 account after 4 years. Year 1, we are at almost £18,000. Year 2 is £32,000. Year 3 is almost £60,000. And by year 4, you have over £100,000. The account snowballs as it grows. Now, with a £100,000 account, you are risking £2,000 per trade. Do you think that is enough to start thinking about withdrawing profits at the end of each month? A professional trader does not look for or claim 100% returns per month because it is impossible to maintain and would wipe out their account. As you start off, understand that compounding is the true secret of trading. Look to build slow and steady. Let compounding do the rest. Build a life skill over the long term rather than gambling in the short term for huge returns and ending up with nothing.